And let's check in on shares of Under Armour, the brand that says the only way is through. Well, they're going through this morning. They're down by about 2.2% following an earnings beat on the top and bottom lines for their third quarter as they saw revenue increase 3% year over year. The sports apparel giant also raised its fiscal year earnings per share outlook, now expecting it to come in between 52 cents to 56 cents at the top end versus the previously expected range of 44 cents to 48 cents here. So for Under Armour, unfortunately, in this most recent quarter, though, they did see their gross margins decline by about 44.2% compared to the prior year. That's something that they also had to just let the street know about in this third quarter 2023.
So it wasn't a quarter.
Inventory was up 50%. We love that inventory number, so that's not a good number. That
margins were hammered 650 basis points year over year. No challenging quarter. I think the tone here is not unlike we heard from VF Corp last night. Both these companies remain in turnaround mode. Of course, VF Corp now being led by Ben Odor, new CEO there, interim still, new CEO there. New CEO coming into Under Armour. It's Stephanie Leinart. She will start soon. Longtime married executive. She's best in class, but she's got her work cut out for her. First, I think, is she has to articulate her vision to finally transform this company, and then secondarily, work some of this inventory down. That's a huge increase.
Well, yeah.
I mean, we got the shoe guy over here. Do you own any Under Armour shoes?
I do not. However, I've wanted to try out some of Steph Curry's golf shoes. He has his brand within Under Armour, of course, that they launched for him back in 2021, I want to say. But, and just to correct myself on that gross margin, it was at 44.2%, down 650 basis points, as you mentioned. But again, it's the favorability of certain brands versus Under Armour right now. What are some of
Hoka on fire.
Hoka on fire. You've also seen New Balance on the casual side start to take over even more. Nike's kind of maintained some market share there, and Lululemon actually surprisingly has been rising up in the ranks. I'm seeing that more on feet outside.
Well,
really?
Whatever. But I'm just it's the quality. You're a sneakerhead, Brad.
Yeah.
The quality. You just hold up one pair of Nikes, something comparable to an Under Armour, and you can touch and feel just the quality, and is not only that, Nike's just cooler. They've just developed this whole community around that brand, notably online. Under Armour does not have that.
You know, it's almost, remember back when people were getting their names, and people still do get their names written on their Starbucks cup, and whenever you got your name written on your Starbucks cup and it was wrong, you would still tweet it out or you'd post it, and you'd be like, I can't believe they messed up my name again. It's spelled B-R-A-D. Like, how did you add 5 extra letters to it? You're still adding on to the visibility for that brand. I say that because Nike has a very similar, issue that's not an issue for them, I guess, on their hands with the sneakers app. What sneakers app does Under Armour have? They have a website. They've failed to your point, build out a digital ecosystem, I would say, in order to make sure that everybody knows from the moment they step foot in the store that they can also have a similar experience in searching online and having a community-based digital ecosystem as well. And that's what leaves a lot to be desired, I think, for investors that are looking at the shares over time. All right.